Good morning, traders. Welcome back to Outlier Live. Today, we have the top 3 stories of the day. First, big U.S. banks, they are struggling. They are scared, and they are trying to get rid of these assets. Keep watching to find out what that is. GM has decided to take a big gamble, and I don't know if it's going to pay off for them. And lastly, AI at NVIDIA, it's dead. So tune in to see why. Hey there, traders. Welcome back to today's Outlier Live. My name is Christopher Yule, and I love talking about stocks and finding those outlier trades with outsized returns. And if you're interested in that too, be sure to definitely hit the subscribe button down below. And today's episode is sponsored by Outlier.com. Go to OVTLYR.com to find out why outliers win. Now, our top story of the day, big U.S. banks are reportedly trying to dump commercial real estate loans, but buyers are scarce as pressures mount for property markets. Let's break this down. There are a lot of issues to discuss here. First off, the fact that COVID has changed everything really is where we need to start, right? The work from home revolution is here. People don't want to go back into the office, right? Can you blame them when they can sit at home, work autonomously instead of sitting in the office with a boss staring down their back, right? Nobody actually wants to work in an office anymore. But the problem with that is there is billions and billions and billions of dollars in commercial real estate that still exists as open loans out there for a lot of developers and a lot of banks. And now these banks are trying to dump that sector, right? They're trying to get out of this. They're trying to say, hey, we don't want this anymore. Big banks are trying to dump commercial real estate loans as pressures mount on the sector. Think about it this way, right? If I'm a bank and you're a bank, and I've decided to take $5 billion in commercial real estate loans out, and you're looking at me with no commercial real estate loans, are you actually interested in what I have to sell you? Probably not. But if you were, the only way that I'd be able to sell it to you, especially in a business environment that looks like these loans are just not going to have the value that they once did, is I have to take massive write-downs. I have to take huge losses. I have to probably sell it to you for 70, 60, 50 cents on the dollar, which is going to be really bad for me. That's going to be really bad for me as I'm holding on to this debt. Banks could be willing to sell property loans at a huge discount as troubles mount in the sector, but some are hesitant to sell off commercial real estate debt as at too low of a price, right? It's kind of like buying a stock and then watching it go down, but you don't want to sell because it's just gonna, this is probably going to be the bottom. I hope, I promise. I really think it might be, but they're hesitant to sell it off because that could reignite fears of banking troubles. And as a result, many banks are choosing to hold on to the debt while they seek better offers. Now, I don't know how many offers that they're going to get. Like I say, the environment's changed. The market has changed. And these banks, they don't want to admit it. And they certainly don't want to get rid of these loans if they have to take 50% write-offs. Maybe as low as that on each one that they have. It says there's about $1.5 trillion of commercial real estate debt that's set to be refinanced over the next 3 years. That's a big problem because much of this would run into trouble as rates stay elevated and property valuations decline. Let's think about this for a second, right? Rates have gone up tremendously, but if you have to refinance that debt, let's say you got that commercial real estate debt at 3.5%. Now rates are closer to 7%. You, as the real estate developer, you may not even be able to pay back that loan. We've more than doubled. Some places have tripled interest rates. And if I have to pay back the asset at 3 times as much interest as I was paying before, and I have way less tenants, when I have way less people helping me pay the banks, pay their rents, we got a problem. We got a huge, huge, huge problem. So what are they going to do? I'm not exactly sure. Rudes, good morning. Thank you to you. April, good morning. Tackle Trading, good morning. Good to see you. Jack, good morning. Tom, good morning. Glad to see you all here live. Yeah, we have a huge problem in the real estate sector, and especially in commercial real estate, right? And looking at the outlier data for JPM, that was one of the banks that was mentioned in here. We can see we got a sell signal back in June 26th. And while the market may have marched forward a little bit, we're actually running into right here what is called a downside indicator. So if you're still holding JPM, Now may be a good time to take those profits and move on, because we're getting a big warning light, and these warning lights can be followed by huge downside indicators right afterwards. So taking a look at the JPMorgan stock price, yeah, it's gone up, it's hit a wall, and it's coming back down, and it looks like it may be coming down really, really fast. So if you're interested in learning more about that, definitely go check out outlier.com to get access to this data. But yeah, big US banks, we got a huge problem here. And let's see what the comments are saying, right? But they said no signs of recession. That's what the comments are out there saying. Let's let commercial real estate be turned into residential housing. Hey, kill two birds with one stone. Problem solved. This is a big deal. Yeah, this is a huge deal out there. Brian, good to see you. Good morning. So I don't know where the big banks are going to be selling this off to, and at the end of the day, that's kind of the question being asked here is, if we have these huge problems, who's going to be stuck with the debt? What about the regional banks? They're having the same problem, Brian. Absolutely, without a doubt, they're having the same problem. So let's move into our next story of the day. Oh, GM is making a big gamble here, a huge gamble. GM has said they're going to drop Apple CarPlay and Android Auto in all their vehicles starting right now. The Cadillac Escalade IQ will not have Apple CarPlay or Android Auto. And I was reading through this, which is pretty interesting. A 55-inch pillar-to-pillar infotainment system will not take advantage of the Apple or Android Auto. Now, as cool as that looks, as cool as that sounds, I think Apple could be, I'm sorry, not Apple. I think GM could be making a huge mistake here. In fact, reading through this, it says nearly 80% of new car buyers insist on having CarPlay. So you're telling me that 80% of your buyers are insisting on having this option, and you just decide, you know what, we had it, we're taking it away, we're not putting it in any more vehicles. I don't know if that's such a great idea. I think that is a huge, huge, huge gamble that may not work out so well for GM. Now, I drive a Tesla, and it does say here, Tesla offers a similar feature and also does not have CarPlay or Android Auto. But you know what Tesla has? Tesla is Tesla. Tesla is its own category. Over in the EV space, nobody can touch Tesla. So they don't need Android Auto. But in GM's world, everybody's fighting for the same scraps while the market is really shifting to EVs. And if GM has decided to remove something that 80% of the buyers want, we got a huge, huge problem. Brian's talking about taxpayers are always stuck holding the bag. Yeah, you got that right. And they may be stuck holding the bag on GM if GM can't put Android Auto or Apple CarPlay back in their vehicles. Let's go look at the outlier data real quick. You can see here the outlier data gave us a sell signal back on June 26th. And then looking at the GM price, it has been awful. Look at that. Just murdering the price on GM. So outlier definitely gave you a little bit of a heads up there. And now you can see that the market has really decided to punch GM in the face. If you want to think of it that way, punching GM in the face with that news, because the market does not like the fact that they are removing something that 80% of people are saying they insist on having. So if you like that story, let us know by hitting the like button down below, and be sure to hit the subscribe button so you never miss any of these updates that we do every single day of the week. Let's move into our final segment. NVIDIA, AI, ChatGPT, it's all dead. Or at least that's what people are saying out there. And I want to know in the comments down below, what do you think? Do you think that AI is dead? I'm not really sure, but I do know one thing. My name is Christopher Yule, and if you love talking about stocks and finding those outsized trades with outlier returns, then you are definitely in the right spot. Be sure to hit the subscribe button so you never miss any of our videos that we post every single day. And today's episode is sponsored by outlier.com. Go to ovtlyr.com to find out why outliers win. So, is AI dead? I don't know. I mean, let's take a look at the... I just closed my charts here. I was going to say, let's take a look at the NVIDIA chart, and we'll decide what we think about that, right? Looking at NVIDIA, it's definitely had a huge, huge, huge run lately, but it also hit a huge, huge, huge wall right? A lot of people were getting into NVIDIA and then bam, hit a wall, and now it's coming back down. It's below its 50-day moving average right now, and I'm not really sure how far it's going to go. Looking at the news for it, though, let's see. This was driven by an over decade-long start in the kind of artificial intelligence chips and software now coveted across Silicon Valley. They're up 180% this year, beating everybody else in the S&P 500. And its core technology is the backbone of the hottest new products like ChatGPT. So I don't think AI is dead just yet. I think AI is just getting started. So I would like to know in the comments down below, what do you think? Do you think AI is dead? Or do you think we're just getting started here? Brian's talking about Tesla. Tesla does have a functional map system. I guess that means unlike GM. So yeah, NVIDIA. Looking at the outlier data, right, it's definitely had a huge signal return shows 874% on these buy and sell signals here. And we're just getting started, in my opinion, with the overall rally in AI. I think you got to look at this from two different perspectives. You've got AI as a technology, and you've got the AI stock, right? Looking back, there's always going to be stock movements up and down. But does that mean that this particular stock is going to ride that entire wave up? Or do you feel like investors got a little ahead of themselves, right? They jumped too much on the hype train, and now it's looking like it might be correcting a little bit. I think the latter is more of the case here. I think AI is not going anywhere. I think there's a lot to be learned in ChatGPT and the implementation of it. I saw some really random stat the other day that said when ChatGPT first launched publicly, that it was able to solve math problems with like nearly 100% efficiency, 100% correctness. And then it got down to under 10%. Which makes me wonder, behind the scenes, they're clearly making changes, constant changes. And of course, they're going to be figuring this out. They're going to go back to the fact that they can make it work. They're going to go back to the fact that they can make ChatGPT correct again. But how long is that going to take? I'm not really sure. And NVIDIA as a stock, I think, is not going to be the only place to participate in the AI revolution. I know that there's some AI chips out there, AI ETFs. But I think NVIDIA, just like if you go back to the FANG stocks, right? Over the last decade or so, FANG stocks were like the one place that you could almost put your money in and guarantee to take it out later for more, right? You had Facebook, Apple, Amazon, Netflix, and Google. And while they may not have the same amount of strength as they once did, you didn't have to buy one stock in particular. It was the tech sector overall. And I think that's where we're going to see this going next. It's not going to be one stock in particular. I don't think it's going to be NVIDIA in particular, but I think that the AI revolution, if you want to call it that, I think the AI revolution is definitely here to stay. But where is it going to be played out? That I'm not entirely too sure about. So be sure to check out outlier.com so that you can get more information about NVIDIA as well as all these other stocks that we're going through each and every day. So that's the top stories of the day. We've got GM saying, whatever 80% of our customers want, we don't care. We're not sure that we want them as customers anyway, which in my opinion is a really, really risky gamble. Is the AI rally dead? I'm not sure. But our top story of the day, and really the top story that should be on everybody's mind, is corporate and commercial real estate has a huge, huge headwind that is not looking good for it. So if you've enjoyed today's episode, be sure to smash that like button. That way the YouTube algorithm knows to share this out with more people because they need to know about what we're doing here every single day. Thank you all so much for coming to today's Outlier Live. Mahesh will be here tomorrow going over his stock analysis. Have a great day, and we'll talk soon.